Antes, nós agora vamos ter um orador em inglês, o Daniel Fossum, e portanto todas as pessoas que precisarem de tradução poderão ir buscar à bancada da entrada, sendo que antes de agora começarmos com a apresentação de Daniel, foi-me dito que vamos ter aqui um pequeno energizer, não sei, estão a precisar de um
Ricardo,
energizer?
sim, bora lá.
Sim, não? Essa é que vamos dizer. We're going to do an energizer before we continue.
Okay.
Do you want this?
Sem vergonha, hein? You'll use this, right?
Yeah.
Okay. It's okay. All set.
Calma os mais envergonhados, tá?
Hello. You're ready?
Okay.
I'll let you know 2 minutes.
Okay, perfect. Okay, this will be in English, so I hope some of you can understand me. Thank you all for inviting me to this exciting conference. I think it is important that we have these sort of events, especially with what we are seeing in Europe and in markets all over the world. I've come here today to talk a little about what we're seeing in Europe and why it is happening. And many of you probably know a lot about this, but I want to try to give a little analysis, or analyze it, and try to understand why we've come in this position and why a lot of these countries, in especially Europe, has so much debt. So I would like to start out by taking a look at the current situation. Today, many of the countries in Europe are stuck in what has been known to be the sovereign debt crisis. And this is basically an ongoing financial crisis, primarily in small economies, that has made it difficult or almost impossible for countries to refinance their government debt without the system or without the assistance of a third party. And the countries in worst condition today are probably Greece, Portugal, unfortunately, and Ireland. These are countries which are facing an imminent risk of default on their loans, and without the help from the European Union, in this case, they risk going bankrupt. And this is a scenario that many are afraid of, since it may create total chaos around the world. You see, if one of these smaller countries like Greece, or for example Portugal, is to happen, this can lead up to a possible bankruptcy in countries like Italy or Spain. And these are countries with much bigger economies, and they also suffer with high government debt. So the hardest hit one, or the hardest hit country of the one we mentioned, is probably Greece. And here a massive bailout is already taking place to rescue the country from a default on its debts. The public debt is presently of about 180% of the GDP, which is huge. And also the private debt is also massive. So Greece is now in a position where it has to borrow money to service its debt. Just like a regular company, the revenue needs to meet the expense. And after a certain period, the country can also go bankrupt. And especially if it is not able to generate enough revenue or to pay their expenses. And what is happening right now is that Greece has been forced to borrow money to balance their budgets. And without these loans, just as a company, they will most likely go bankrupt. Now the problem becomes that when you're trying to loan money and these loans are perceived as a huge risk, mainly because the debt seems to be out of control, the borrower who gives out the money will want a higher interest because you want to compensate for the risk. You don't want to give out money if you know that the chances are small that you want to get it back. So as you can say, the perception of the crisis becomes bigger, then also the interest rates will become a lot higher. So if we see here, these are the interest rates in just a few months have just exploded. And if this was a regular company, it would be bankrupt for a long time ago. And when you're lending money at almost 20-25%, you're never going to be able to balance these budgets. And if you see over the years, the debt has constantly been growing, and it's now at a point where there basically is not too much money left. So if a default is to happen, if Greece is not able to pay back its money and risk going bankrupt, and this is not really often that countries go bankrupt, because if it does, all the lenders, including a lot of banks, will not get their money, and they may also go bankrupt. And if banks start to go bankrupt, people will be not able to get their money, and this will cause further bankruptcies. And if this continues, we risk that the whole global economy will suddenly just freeze up. And this is exactly what happened in 2008, where you saw a lot of banks, particularly Lehman Brothers, went bankrupt. And this caused a catastrophic fear in all the markets. People didn't want to lend money, and trust is a very important issue in today's markets. So right now, the big fear is that the consequences of a possible bankruptcy of Greece may be much more severe, because this is a much bigger institution than just a small bank. And a possible default could lead to money being pulled out of Europe, stock markets crashing, and leading Europe and possibly the global economy into a terrible depression. So basically, most people agree that a default is unacceptable. And this is, fortunately, the general consensus around the world, most importantly in the EU. And based on that, the only option right now seems to keep lending out money to the countries in crisis. And this is what we usually call a bailout. However, these types of what we can call a rescue loan, they have certain strict conditions. Let's say the IMF and the EU usually go in and give big loans. But these loans have certain guidelines. And to be sure that they get their money back, usually they limit these conditions. And step one is usually to cut in government expenses. And this means, a reduction in government spending, lower salaries for government employees, pension, welfare are reduced, and big layoffs are also executed. And all this is just to be certain that the country finally will manage to balance their budgets. Because without balancing the budgets, they will not generate revenue to pay these loan backs. And all this is, with time, meant to restore the health of the economy. And it's at least what they hope it will. So, we have to ask ourselves, why is it that the government and the general public started to borrow so much money in the first place? And actually, the answer is not that complicated. You see, after the Second World War, most of the world experienced tremendous economic growth. And this was basically or mainly a result of many factors. And for example, labor became a lot more productive, and this increased productivity. This again gave better salaries and gave the common man a much higher purchasing capacity. And purchasing capacity is a factor that is essential for the economic growth. This is what we're seeing in India, in China now. The ability that people can actually buy a car, can actually afford a refrigerator, getting people out of poverty. However, since the 70s, the trend has been that rather instead of making life better for people, it has in many cases made it worse. And what has happened is that mostly the privileged have gotten the benefits of what we can call the productivity gains. All the gains we have seen of this development has gone to mainly the rich people. Because profits from many of the companies have been going to owners, CEOs, top executive, instead of being reinvested back into the company, and especially the case of adjusting the salaries to meet the increase of prices. And this we can especially see in the United States, where the salaries have just been stagnating and the prices have been rising. Also, the case of deregulation have encouraged more speculation. And the more speculation you get, it makes usually the richer, and the poorer, poorer. When this productivity increased, where you got technology, automation, a lot of people lost their jobs. And also salaries decreased, usually also, as we were speaking about, outsourcing. When you outsource, a lot of people lose their jobs because you find cheaper jobs overseas. So basically, manual labor started to lose its value. And this resulted in a decreasing purchasing capacity for the common people. People didn't have money enough to afford what they usually did. And when this happens, the economy starts going slowly down. So now a new problem starts. A big part of what we call the economic equation is left out. Because the workers you're paying are also your customers. And if you cut the salaries of the workers, their consumption will go down. And when consumption goes down, so does the demand for goods. And if the demand is reduced, which means that people buy less, then supply, for example, manufacturing, will also go down. So This, again, cuts the profits for the big companies, and this leads to a vicious cycle that pushes the economy down. And before you know it, you're facing a possible depression. So the only way you can get out of a depression is to increase the money that the common people have and that the government can spend. And there are two ways you can do this. You can either increase the income of the government and the common people, and this you can do either by progressive taxation or giving higher salaries to, especially then, government employees. Or option number two is that you can increase borrowing of government and the common people. And what we've seen happening is that the second option is chosen. And I think it's because it's the less controversial. In order to prevent the economy to go into a recession, they start making it easier for people to loan money. Credit cards, low interest rates. And this is mainly to get people to continue their consumption. In addition, the government themselves start to make up for the shortage in demand by borrowing money and putting it back into the economy. But the problem is that how they do it is often by bailouts to big companies, because these companies probably have suffered big losses, and this remedy has been going on and on. The problem is that what we've seen is that these efforts have little effect for the people or the common people, and it's only mainly the big companies who come good out of it or actually benefit of it. And for the taxpayers, much of these borrowed funds go to waste. And the aftermath we're facing now has created debt burdens in all these sovereign countries as we're speaking. So if you see at this chart, many of these so-called powerful and rich countries, they have enormous public debt. If you see the debt of Greece, it has the highest percentage of debt when you compare it to the GDP. But the total debt is relatively small. For example, if you look at the United States, they are going to seriously face some challenges in the years. And if you also see, in the last 2 years, it has almost doubled. And these numbers are enormous. So one can understand that people are getting concerned how this is developing. So what is difficult to accept for the general public is that the results of these bailouts is usually hard reality for the people involved. Because in order to cut the budget deficits, to balance these budgets, as I was talking about, they will have to cut the income of the people, which again will reduce consumption. And the next step then is that you get a high unemployment and the economy just stands still. So this slowdown will start affecting the countries around. And if you, for example, look at Spain, the unemployment there is almost 22.9%. And that's high. And if you look at the younger generation, or under 25, it's almost 50%, which is just shocking. So even though Greece may be rescued from a bankruptcy, it will just be a matter of time before the whole economy will start slowing down again. Because they haven't changed anything fundamental. And basically what they do is just they buy themselves time, because they're never going to actually get out of it. If they had tackled it from the beginning, it may have been a lot easier. But right now, it's just being postponed, and the debt is just enormous. So, just short, you see the unemployment here, especially in the countries we're talking about, is quite shocking. So, what is the solution? What we know is that it can't be to cut the purchasing capacity of people. Because if you do that, then the aggregate demand in the economy will drop dramatically. And the only way you can deal with debt is to grow your way out of it. You need the economy to grow in order to pay back the debt. But by stopping all those things, you will just create a catastrophe. So the kind of bailout we're talking about and the kind of solution that the government is proposing, I don't think is going to work. So the only solution that one can do is to change the trend. And we have some alternatives that we think need to be done. And instead of making more and more profits for the big companies and squeezing more and more workers, getting them to work harder for less salary, you have to start cutting the big salaries and make sure that the people who have benefited all this year start paying their fair share of taxes. And you need to make the tax system more progressive and put money back into the people or the common people, because they're the ones who actually make up for the growth. And you have to give it to them not as a loan, but as their fair share of the work they've been doing all these years. And if you can't do that, then I think you're facing some serious problems. So, the thing now is that the world is becoming smaller and smaller. And in that sense, also more and more dependent on each other. You know, almost no country can manage on its own, as we see today. And the debt crisis has become a global problem. You know, countries on the other side of the world will be just as much affected as the neighbor countries, because we're so dependent on each other. So the only way, if you're going to implement any alternatives, it has to be a global solution. So some of the alternatives I've mentioned, it will have a very limited chance to work if it's just in isolation in a small country. And ideally, it should be implemented on a much larger scale, either a global or at least a European scale. If it's tried in isolation, most likely capital will just flee, and the country risks going into the same problems as before. So, I come from the Pratt Research Institute, and we're working on some different ideas on how the economy can function and be sustainable as well as prosperous. And we want to present some immediate and some long-term solutions that we think are essential. So if we start with immediate actions, these are things that should and can be introduced from today already. And is something that may cool down many of the problems we're facing. So first of all, you need to reduce top salaries. You have to compensate not only the chief officials, but you have to compensate the workers. You have to remove tax loopholes, which is draining the economy of much of its resources. And maybe most important, you have to increase the general salaries. Introduce a higher minimum wage. And you need to encourage economic growth from the bottom down and up instead of the opposite. Because today, you give help to the big companies and you hope that it's going to trickle down. But what we're seeing again and again is that it's the few individuals that are actually earning on this. The long-term solution, or suggestions, are ideas that should be a cornerstone for the economy in the future. And these are suggestions we come up with. We feel there should be a guarantee, or you should guarantee a minimum income to anyone who wants and has the ability to work. You need to put limits on the tremendous accumulation of wealth that is dividing society. But this has to be a democratic process. You have to ideally make the regions economically self-sufficient. There needs to be a less dependency on all the global markets. Because when you're so dependent, you're also very vulnerable. And the last is to encourage trade and international cooperation. There needs to be a trade of goods and not a trade of capital, which we're seeing today. So that was all I had. So thank you.
Muito bem, muito obrigado aqui ao Daniel. Eu, entretanto, na altura esqueci-me de introduzir o Daniel. O Daniel é norueguês, faz parte do Proud Research Institute desde 2011, chegou a Portugal ontem, apanhou uma grande chuvada, uma granizada daquelas fortes.